Now, we know the market is going to rally, and we're reviewing it and looking to see what signs are there for a rally, for follow through. The job of everybody who trades short, medium, long term, doesn't matter your time frame. You're trying to get longer short right before a big move up or down or a move up or down. You're not looking to get long thinking, well, in 30 minutes it's going to rally. No, you think it's going to rally pretty soon after you open the long position. Or why would you open it at that particular moment? The definition of a good location is price goes where you think it's going to go ASAP. The faster it starts going in your direction, the better the location. Don't let anybody tell you different. That's how you minimize risk. That's how you manage risk. It's always easier to manage risk when you have less of it because you're playing with the house's money or goes your way sooner rather than later. Anybody that buys it to say, well, I expected it to go plus or minus a couple points around my entry for a half an hour, then rally, that's not what they would say. Nobody is getting long thinking I have to wait. Everybody is getting long in this example, thinking that they got the timing down where it's going to rally pretty soon after they bought it. So we know it's going to pop now. At the time, the thought process is a couple things to make sure hindsight's not 2020. Number one, we're above our PWAPs, which gets you to lean a little bit to the upside or the bullish side. PWAPs are dotted lines here, right? Here's the green and red PWAPs that are coming in right there. We're above that, number one. Number two, there's a consolidation box that you could see visually where there's a series of highs. You can't see them back in here, but there's a couple highs, top of the range, bottom of the range. Congestion box means that the market had found value in that range for a period of time, but it isn't going to stay there forever. And at some point, people are going to get caught too long or too short. If they get caught too short, that's when the pop and the breakout to the upside happens. Why? Too many people short, too many people have to buy it, too many people have to buy something, the better chance it has to go up because that's what's needed for the price of anything to go up. More people who want to buy it than want to sell it. And so you got and you understand or visualize a congestion box, try to time an upside breakout, and you're above the PWAPs, gives you a little bullish lean. And if you start to trap that side of too many shorts, is getting you closer to the timing of getting long now instead of missing it one or getting long and having to wait two. You need the element of too many shorts, more shorts than longs for a breakout to occur or a high probability of a breakout occur. Okay. So those are the things that you could kind of say, even without knowing what we know now. We know it's going to pop and follow through, but there are a couple things that you could have certainly said before it happened. So you know you're not just using hindsight. So another thing, our chaser here, pretty even the amount of sellers to amount of buyers, about 400 up right there. Okay. Pretty even. We want to see this go bye bye, which means sellers abate, go away, less sellers above than buyers below where price currently is, also increases the probability of an upside breakout. Makes sense? If you have too many people that want to sell it above, it's going to have a tough time getting through all that. But if they go away for whatever reason, it's got a better chance to then move through that area. Our laser, which is this little green right in here, then it's red over here, it's green back in here, goes back and forth, showing us if there's more longs or shorts over the last 2 minutes from our OPP. Here are the raw numbers. That's balanced, 20 by 21. So we got 20 contracts long, 20 contracts short. These are real longs and shorts, but it's not all the longs and shorts. It's a sample size based on how we measure and analyze, filter the MBO data that the CME puts out. Now, going to fast forward it, tell me on the chaser and or the OPP, you see something change as we play it. All right. Oh, by the way, let me pause it. Our stocks here, Google and Apple, two of the Mag 7, two stocks that can play a role in the movement of the ES and the NASDAQ. They're really important and big weight-wise influencers on the index. They're part of the damn index. So you would like, if it gives you a lead, great. Or if you're long and you see Apple and Google rallying, you're more comfortable and you're using more objectivity, to stay long or be comfortable long. Now we'll play it. Tell me what you see. Did you see the sellers diminish? Absolutely. Got below 200, which I'll pause it again, which is kind of a number when it gets below 200. That's getting low. And the market really now has the pathway cleared for it to rally. All right. Then I have to stay below 200, but you're seeing moments where sellers are willing to back away. So let me back it up and then go forward. You're usually going to see less sellers for it to go up. You guys that look at this all the time, do you ever see it pop when this gray is nice and fat? No. Go back and look at your recordings. It's hard to pop when there's a lot of sellers. That's why it doesn't pop. So it thins out. You see this thin out visually. You see this number get below 200. And these are the raw numbers. The number of buyers are 616. All right. Now, these are not just resting buy orders and resting sell orders. There's different filters we use to assess movement of orders. When buy orders get moved up, they're aggressive. When sell orders get moved up, they're passive. Sell orders get moved up, they're passive. They're the opposite of aggressive. So they'd be gray. When the buy orders get moved up, they're white. Why? They're looking to buy the damn thing. They're getting anxious. They're aggressive. And so it's more than just the number of buyers and sellers. We kind of create a little bit more of a profile, a description of the kind of seller or buyer that they are. Another thing happens. What did we say we want to see in the OPP or the laser? We want it to be red or green? Red. Red means more shorts than longs. That doesn't necessarily mean a lot of shorts, but in order to find if it's a lot of shorts, you got to compare it to something. You don't find value of anything without generally comparing it to something else, right? There'd be no such thing as ugly people if there weren't good looking people. And round we go. So compare, contrast. How many shorts? Well, how many longs are there? So 14-9 is pretty small because it was a slow day to begin with. So those aren't great numbers. So as we play it, see if short, ooh, big short piled in here. That's bullish. So someone came, opened up a big short, tried to get out where he got in. And that just adds to the number of shorts, adds to the laser being red, and creates the opportunity and probability that we're going to go up and stay bullish. Then you watch if you keep an eye on some of the ancillary stocks like Apple, Google, you see them walking up on the left-hand side of the screen. You certainly want to see the NASDAQ break out of a similar congestion box if they have it, and they did. If you take a look at the lower left, you could see the congestion box, well, tail end of it right in here, where they had similar tops that they could break out of. So you had similar highs, range highs in two indexes that you're going to scare the SHIT out of shorts, get them nervous, and then they chase. A rally, no matter what kind of rally it is, always has a real big element of shorts chasing. Think about when you're short and the market's getting away from you, you're getting aggressive, you're trying to buy it higher. You don't get it, buy it higher. You just want to get the hell out. You're chasing it. You know how that feels. Well, forget about how you feel. When could you read the market and get a sense of how the market's feeling? That's what you're trying to do. It's not about your opinion. It's the market's opinion. We're just trying to follow it. All right. And so you could see it walk up. You also see it puke some shorts in there, right there, and still follow through, which is real bullish. So it pukes a bunch of shorts, but there's still enough in it because they come back to here and they run right back up to the top. And so you're getting a breakout. Now, I tell guys all the time, all right, if you're not long for this, no problem, but you shouldn't have been stuck short. Seeing all the things that we walked through, you shouldn't have been stuck short. And then you start to see both PWAPs chase it because of open positions and us tracking that. Eventually, the market's going to rotate back to what we call our PWAPs, but there was no reason for it to happen anytime soon. You could see it finding buy imbalances, trade sideways, has another run up right here, where right here, how is that predictable? It rejected this sell triangle, which is showing a sell imbalance at this particular moment. If it gets above that, you either got to get long if you're bullish or not get short if you're bearish. You don't want it to reject, which means go above a pink triangle. It's filling in the imbalance pretty quick, showing strength. You got to predict future buyers and sellers. If you're not predicting future buyers and sellers, then you're not going to predict the future movement of the price or the future location of the price. Um, there's just other moments when reading these tools in real time. You see this blue triangle come in right here. Boom. You get quick reaction to the upside. Doesn't just, um, fool around there. Boom. It catches a bid pretty quickly. See how it fooled around on this one and didn't go up, didn't go down. So it went sideways a little longer and then boom, another imbalance. This one got it to roll. All right. And then you see the gray skinny up on the chaser. Let me back it up a little bit. Look how skinny the chaser gets. Gets close to, if not below 200. Take a look at this number. It does get below 200 for a moment. That's got to give you an indication to either get long, stay long, get the hell out of a short, don't get short. Trying to stack probabilities by reading order flow. Reading order flow is reading other people's positions. It's reading when those positions, long or shorts, may be imbalanced, and knowing what we know, what you should know, that after you're long, you're a seller. After you're short, you're a buyer. So if there's too many shorts, then there are too many buyers. When there's too many buyers for the price of anything, they're going to most likely adjust that price higher. So your job, trying to predict the future location of a price, start thinking of predicting the future buyers and sellers that are going to appear. And how do you find those buyers and sellers? They're future buyers and sellers. How are you going to find them? Where the hell are they going to come from? Well, they certainly could come from if you're following other people's positions, OPP, because we know too many shorts, too many buyers, too many buyers. We start to then answer the question, not only that there are going to be a lot of future buyers, but we know where they come from. That has to be an aha moment for anybody that might have heard that for the first time on this video. Follow through. When do we have our best chance of at it? What elements around it will give you objectivity and confidence through objectivity and not how you feel? Remember, when you open a position, there's a lot of emotion of being right versus being wrong. So you have to work hard and not letting the emotions read the market, because you're going to see things that aren't there and you're going to miss things that are there. You got to be objective. The only thing that allows us to be objective are good tools. Shitty, irrelevant tools allow your emotions to interfere with your decision-making process. See this big jump right in here? That was a lot of buy stops that came out, shook out a lot of shorts. And if we take it back, what could have made sure that you weren't one of those shorts? Well, everything I'm talking about, but also including, look how effing thin right in here, this gray profile is of not just sellers. This is not necessarily how your dome, if you have a feature to profile offers above and bids below, is going to look. These are unique to the movement of orders. So the fact that it, bam, popped like that shouldn't be a surprise based on what you saw before price did what it did.